Good morning and welcome to the Early Bird. Here we're looking at the S&P 500 on a daily chart, and just want to point out that we've got this five-wave structure moving to the downside here, and in Elliott terms those five waves make up a larger wave one, and then we receive a and a B and a C correction. After that, a three-wave counter trend, and then we'll see another five to the downside. So because we got this five waves down here, we'll be looking at a three-wave correction through here, and once that's complete, and we'll be looking to the downside from that point. So the this pattern where we are at the moment, this move down through here, that's come down through here, is in five waves as well. So that means that this one here should be a corrective pattern as well. So when we have a look at that little area within here, as such here, then we're looking at this impulse wave to the downside. You can see that this is a different sort of pattern to this one here. This one here's got overlapping wave structures where we've got these lows here cutting into these highs here and so forth. So this is an impulse wave and this is a corrective wave. It's just that this is going quite high up through here now. Normally this would pull back 61.8%, and that's to about this area through here. The next norm would be the 76.4. However, we look at levels of supply, so there's not a real lot of supply here. The sellers would be sitting way up the top here. It's where the most volume was turned over through there. So as you can see, that's still pushing up through there, and we can expect that to push up there higher through there. So we're still basically looking at this in that light. We just haven't seen the turn yet. We thought we may have had it here. We thought we may have even had it through here. But it's just continues to expand, and that's what corrections are doing. When it's kind of like they're just waiting for other markets to fall into place, and the other markets in this case, of course, well, there's the bond market, of course, which is the big focus at the moment, and we don't particularly follow that as such on a daily sort of basis. We normally follow the currencies because most people trade those things. So we'll look at those markets, the US dollar and the euro. Are also in corrective patterns, and they're in more convincing corrective patterns than what we're looking at just here. But I just wanted to point the Elliott wave count out for this, and secondly, that when it comes to the levels, we know that it's a game of support and resistance, and while the S&P 500 is above this mark here, the 1250 here, the midpoint, then it's supported. So we can expect profit taking to come in at the 1280 here. The you know, I like the 72 number, especially when you've got 772 or 272. So we're seeing that sort of play out at the moment, and there'll be a little five waves in this structure here. If we have a quick look at the Dow Jones in a couple of ways, first of all, the 12,000 here has been tested as support. So that 12,000 there is significant as support, and while that market is above that 12,000, then we have to look at it in a positive light, and this is where the trading levels would separate from the Elliott wave. As such, the Elliott wave is a pattern recognition, the same as, you know, looking at triangles and heads and shoulders and so forth. So it can be a little bit tricky at times. We need to look at the game of support and resistance. So we can see that up through here, this old high here is going to be the resistance in there, and that will come in where it sort of is at the moment. Then if we look at that structure that's coming in over last night here, we can see that we've got up for one and little ABC back for two. We've got this nice third wave up there, which is still probably part of that. That's probably the fourth wave here actually, and the fifth wave going up through here. So we'd probably end up in for this little structure here before it rolls over. We'll be looking at subgroup 2 here, the 65, 72 and the 80 before it rolls over. And we also know that there's a lot of supply coming into this area here as well, as we just noticed over here as well. So that 12,172 and 200 here, the 12,200, that's where the real supply and the real pressure is going to be, and that's probably a reasonable sort of turning point there as well. We'll definitely see selling off happening through there. It does bring us to the, I'm going to go to the currencies at the moment, because they're kind of the other side of the coin. We'll come back to the ASX 200 and the SPY in a moment when we have a look at the base metals, but we can see that this move here in the US dollar here is probably a little bit probably a bit easier to have a look at it in terms of the euro. So I'll just bring the euro up here. Right, so this is a 4-hour chart here. So this move down in the euro down here, which is a bit like the move that we've had on the stocks as well, is that this move here that we're looking at here, you can see that this is an impulse wave and this is a corrective wave. It's got overlapping wave structures through here. So we were expecting it to push up to the 139. That's where we sort of had it late last week and early this week, and also for the Australian dollar to push up to sort of 105. But they were very sluggish in doing it, and we were wondering if they would get trapped under these current levels here, the 138. But we can see that they're pushing up for some reasons probably come out late in Europe there, I'd imagine, pushing these markets up so quickly. But it'll be short-lived. But you can see that this is an impulse wave and this is a corrective wave here, and that's the important part. So once this is complete here, then we'll see further downside with this market as well. And that's the same with this is the US dollar, and it's the same, but the mirror opposite. So we're looking at this on a 15-minute chart here. So we're looking at any one of these retracement levels through here to come down to, and yeah, I mean, looking at the 50%, I like the 76.50 here, so we'll look at all of that in there. But the correction that we were tracking through here in terms of this little A, B, and C here for the A, B, and a C here, then it's basically just gotten larger now. So it's basically an A and a B and a C. So once that finishes here, this is a corrective pattern, and when it's completed, it will continue its trend to the upside over here. So that's what we're sort of looking at. So while we're waiting for the indices to play out, then we have to look at what other markets need to fall into place, and it's definitely the currency markets and the bonds market. So yeah, so yeah, that's kind of it really in a bit of a nutshell there. We're waiting for, we strongly feel that this is a corrective pattern through here because of these impulse waves to the downside, and we just need for them to play out, and we just need to be patient. That's what we need to be with this. So while this is pushing up here, then all the normal things will be happening. Of course, gold just hit 1800 here, so that's been sold off through here. And obviously something's happened in Europe there. Berlusconi's probably sort of stepped down, or something of that nature has obviously occurred through this, because gold was pushing up to the 1800. But when it gets to the 8, it's a profit-taking number, so we'll have the arrival, the reaction, and we'll be looking for support in this region back down here at subgroup 2 here for another push higher through there. The oil market will just follow stock, and we've been just same with stock as well. The Dow Jones, we've just been waiting for it to push up through there. We feel that this once again would also be quite complete in here. It just needs to play out, and we haven't seen that weakness for that to happen yet, but we're expecting it. The weakness that I do see in the markets, and this is coming into our zone now in the local market is is the copper market here, which we use as the general guide stick for base metals, and we can see that the 350 here is the support. So you can imagine if this support was broken, that we would have weakness, and we would have weakness in the local material sector, the XMJ. So we'll see the XMJ probably retest the 11,500 there as well. But this also brings up other markets as well, such as BHP in the US that we look at through here. So we can see that it's really testing into the 80 here, and we just need for this to play out here. So it can, the distance that normally swings above is the distance that swings below. So that's the first swing into play. The 80 is the line in the sand here. So if we see this sort of swing into some sort of triangle sort of pattern here, then develop support here, well, then we'll be long from that stage there. If we see this fail to the downside here, based on volume, because we can see that moving up through there on lower volume through here as well. So, it hasn't really confirmed anything. This is where we don't want to be trapped in this situation here. We are seeing support come into our local market, and when we look at our local market, we can see this is the daily chart here. So we can see the important thing here for us is the trading levels, and the trading level here, 4,300, is the top of minor group 1. So from the medium level, 4,000, then we break the numbers down into 4.1, 4.2 and 4.3, and all of those become group 1 here, in this case minor group 1. And we can see that it's tried to push up through here before, but we consider the breakout part of a process, but not important enough to trade it. It's the retest that we're looking for as support that we find more important in lining up for the setups to actually sort of move in. So, but because this has been quite persistent through here now, isn't it? It's really coming back up through it. The swing above, the swing below, and now sort of moving into it. So, we could be looking at support coming in through here now, and support would be that this is all resistance here before, and then we want the price to be sitting on top of it here. So in a small way, just in here, it's actually occurring at the moment. We're actually seeing that the support come in, and what I mean by that is this: it was under the level here, finding it as resistance, and now it's moved through and come back and retested. This is the classic trading levels pattern that you'll find at levels, and it's the most common pattern, and it's the one that you should wait for. So it's pretty much the arrival, the reaction, the finding support, then pushing up in 5 waves through here, creating the first high above the level, and then checking back in for support here. Okay, so in this little area just through here, we could look at the same thing we're looking at the Dow Jones with. We'll be looking at the 1, the 2, this is the 3rd wave up here. So we'll see a 4th wave develop across here, and then a 5th wave to the upside. So if you're trading this today, then what you'd be looking for here, as we were looking for support on top of the number 3 here, it's taken a while to establish that, then it's the same story on the next degree smaller. So we've got 10, 20 and 30 here. So this is subgroup 1. This is all minor group 1, and this is subgroup 1, and this is the top of subgroup 1. So it's the same story. The breakout's not important, it's the retest. Finding support, and in fact this one couldn't get back up there, found it as resistance and came back down, had another crack at it but didn't find support and is back down as well. So this is what you'd be looking for here again as well. So we've got that same pattern developing in there. We've got the arrival, the reaction, the first high above the level, and then we'll see the basic correction across here. So allow this to maneuver through here, and then if it finds support, then you can trade it up to the midpoint and exit at that point there. If this is the 3rd wave through here, which I think it is, in terms of 5 waves in this little structure here, maybe even one little more push there, or that would be about it there. So we'd see a 4th wave come back to this area in here. So the fourth wave, if wave 2 is normally simple, like a simple zigzag here, sharp and simple and sweet, then wave 4 will be complex through here. So you would need to keep the stops, you know, down under here somewhere, really. If this market came down below this level here, the top of wave 1, then it would cancel out any impulse wave, 5-wave structure to the upside there. But if this is the third wave here, and this is wave 1 here, then the extension is in the third wave. That means that the fifth wave that we have in here will be about the same length as this one here. So it's not going to go that far unless there's some sort of major push in the market. So that's why getting out at 4,350, or if I was trading it would be the 48, it would be the 43, 48 there. And if not, then keep stops really close to it and follow it up at that point. Okay, that's kind of it really. The other sort of European market side of things here, this is the DAX here, and this is the same story again. This is why we feel that the moves up are just hype and just part of a corrective move, because this move down through here is an impulse wave, and we're seeing this as a corrective wave here. And then further to the downside here. But, you know, we do need to see a breakdown. The Elliott is one thing and trading is another. So until this breaks down and finds some of these levels at resistance here, so if we were going to short this, we will want 6,000 as the retested resistance, and then we want to see that breakdown so we could short it from that side there. So while it's above the 6,000, we could say that it's semi-supported. If it finds support on 6,100 here, then it slips into a bit more of a positive mode, doesn't it? And this is the number here that's sort of most concerned to me. It's 6,180. It's just using the Fibonacci as price there, because it will have some sort of impact there, and it is. So that as support there would certainly flip the German market to the upside. And we'll see how we go from that point there. So we're still really in no man's land in terms of trading and also analysis to a certain degree there. But we're going like the Dow and the others. We're going off this November, late October, November move down here, viewing that in 5 waves. Yes, I know that we could also view that in an A wave and an A and a B and a C for the B wave, and then 5 waves down for the C wave. So I'm aware of that as well. That's why we're just waiting to see which side, how it develops in here, and which side it chooses within here. So just sort of recapping a little bit, we've got support on the 12,000 on the Dow, so we can be positive, but be positive in a small way, because it's not a lot of confidence at this stage. We need to eliminate other counts within the scenario, and our local market here developing support on the 4-3 here is definitely a positive move. But this is still the first high above the level, so we're still in early days. So we can expect this little 5-wave structure here to play out, but once that's finished there, then we may see a bigger correction through here. So we'd want to see more development through there as well, because, you know, this to me here is, yes, we've got a series of 5 waves here. This is a 5-wave structure. This is a 5-wave structure. This is a 3-wave structure. This is a 5-wave structure. This is a 5-wave structure. So we are seeing impulse waves to the upside, but you can also see that we're actually getting overlapping wave structures as well. So we're either in some massive sort of bull market that's going to take us sort of above the 5,000 back up to the 61.8% of 5,400, or we're in a small corrective pattern through here, because this ABC here overlapping the top of this one here is a bit of a no-go, and the same as this one here overlapping this one here. So we're either in a little series of impulses building very strongly. If that's the case, great, we'll run with that, and we've been talking about that. We don't get fixed too much on one side until we've got the evidence in. So anyway, we'll see. We're playing with we're burning the candle at both ends here. So but we'll move and groove with it at the time. We've got a few long positions in yesterday, so they could be all right. The thing is, on the weekly cycle, is that the Wednesday evening afternoon is normally the the midweek high. Well, it's not quite the case. Normally Thursday opening is, but Wednesday close is presents that as well. So think of locking in profits on the Wednesday, because in a bull market Thursday is the bear day. So anything you've got there, you want to be careful with. So we just want to be diligent. We're going to continue to trade small lots, be diligent, be nimble, and lock in profits and collect the pennies. Alrighty, well that's it. So good morning and good luck.